I mean, that Chinese data, it's due around the 12 noon mark Eastern time. What are you expecting? I mean, there was that rumour doing the rounds that we could see 9%.
Friday, the most important time for our market today is going to be midday, when those GDP numbers, as well as some of the March numbers for industrial production, retail sales and fixed asset investment, are released by China. By far the most important number is that first quarter GDP number, and consensus is for growth of 8.4%. As you mentioned, there is some chatter around the market that it could be closer to that 9% mark, and indeed if we do see a surpassing of that 8.4% mark, that would be extremely bullish for the Australian market, which is so heavily weighted towards the material space. So we'd see a positive reaction for the material space, the Aussie dollar, as well as the Aussie share market. We do see a raft of other numbers released, but the market probably won't be focused too much on that. The fixed asset investment is expected to drop to 20.5%, industrial production expected to come in at 11.5%, and retail sales at 15%. So all up, it's going to be a very big day for our material space. Some fantastic leads overnight for our miners, and that's because of some very dovish comments coming through from Fed members Yellen as well as Dudley, which helped commodities to rise strongly. So we saw rises in gold, silver, copper, as well as oil prices, boding well for the Aussie market today.
Obviously, it's a shortened trading week, given we had that holiday for Easter Monday. And it's been a really interesting week. We started off in the negative, and then we've managed to claw our way back. What do you make overall of trade this week?
Well, I guess the first thing that sticks out is the volumes that we've traded this week. On average, we're averaged about $3.7 billion per day so far, and that's really dismal compared to the March average of $4.8 billion per day. So that's a fall of about 23% from the average in March. Also, if we compare it to 2011, last year we saw that Easter long weekend combined with the Anzac Day long weekend, but that shortened trading week actually saw $6.4 billion being traded per day. So on average, so that's down by about 25% for the Aussie market. I guess we have to keep in mind that last year we did see an options expiration during that shortened week, so that helped volumes. But even if you move to 2010, we saw an average of about $5 billion being traded in that Easter weekend, and you can see that this year's $3.7 billion average is down around about 25% from even 2010. So altogether, extremely light volumes for the Aussie share market. Having said that, it's been quite a difficult one for our market. This is the week to date, and you can see that overall we've seen a fall so far, down by 0.9%. Today should help make up some of those losses, but by far the worst performing sector has been information technology, and this is because it holds stocks like Computershare and Iress, which are very sensitive to market volumes. Computershare is the world's largest share registry, and Iress provides market data, especially here in Australia and New Zealand, to the broking community. So these two stocks down by about 3%. On the flip side, investors have been flocking to those defensive areas. So Telecom, once again, having a good week, up by 0.6%. And in terms of best performers, we've actually seen Aston Resources and Whitehaven Coal ahead of their merger, both rising around about 6% for the week. So having an extremely positive week there. But altogether, volumes have been extremely slow, so we'll be watching to see if they pick up today.
And just finally, Julia, casinos back in focus. We've heard James Pack has lifted his stake in Crown. There's been this ongoing toing and froing with Echo Entertainment, as well as that inquiry into some wrongdoing at the Sydney Star Casino goes on. What are you watching in particular in this space?
There's a lot of activity and a lot of interest in Australian casinos at the moment. As you mentioned, Crown, with its key assets of Burswood, as well as Crown down in Melbourne, has been very much in focus. We've seen Packer raising his stake in Echo Entertainment through, we've actually seen Crown raising its stake in Echo Entertainment through a derivatives contract, so now holding around about 10%. And then chatter yesterday that Packer's Consolidated Media Holdings has increased its stake in Crown yesterday. We saw a big parcel, $133 million worth, or about 2%, changing hands on the market, and I guess the market really speculating that it is Packer's company that's increased its stake to above 48%. That means in the next 6 months we'll probably be able to see Consolidated Media Holdings raise its stakes to a majority stake. This holding, if it has been bought by Consolidated Press Holdings, will see the stake at more than 48%, and with with the Australian creeping rules where you can buy 3% over 6 months without making a full takeover bid, the market's going to be watching that very closely over the next 6 months. Of course, the other company that's been very much in focus has been Echo Entertainment. We know that Crown has been raising its stake in Echo Entertainment, and in fact the stock has performed extremely well over the last 3 months. Its stock price rising by about 19%. There's also a bit of speculation that we could see Singapore's Genting making a bid for Echo Entertainment, and that's helped to support the share price as well. It has a war chest of about $2.6 billion US dollars, and it's just raised another $1.8 billion US dollars. So I guess that interest over Echo Entertainment, fantastic news for its share price, up around about 19% over the last quarter. But it does look like while the market's floundering, that casino area is one area where there's been a lot of activity on the